Okay, 4.4, end of period work for a departmentalized business. We have one objective. You need to complete end of period work for a departmentalized merchandising business. So closing entries are journal entries used to prepare temporary accounts for a new fiscal period. We have done closing entries before. The following slides present the 4 closing entries. So those are the 4 closing entries in order. First, we're going to close income statement accounts that have credit balances. So those are going to be our revenue and our contra cost accounts. Then we're going to close income statement accounts that have debit balances. So those are going to be our costs, contra revenue, and our expense accounts. Third, we're going to close, well, this one has 2 things in one. What we're going to do is it records our net income or our net loss in our retained earnings account, and at the same time, that will close our income summary account. And then our last closing entry is closing our dividends account. Okay, so our closing entry for our income statement accounts with credit balances is what this one is showing. Only temporary accounts are going to be closed. Permanent account balances are needed to continue conducting business in the next accounting cycle. So permanent accounts are going to be think of our accounting equation: assets, liabilities, owner's equity. Those accounts, we are going to keep a running balance. The reason that we close these temporary accounts is we want to bring them down to 0 for our next fiscal period, because we want to keep track of each fiscal period. Like an example, sales. We want to know every fiscal period how much sales we have in grills and sales we have in furniture. We don't want to keep this open forever and ever. Okay, we want to keep track of each fiscal period. So here is our closing, like I said, of our income statement accounts that have credit balances. So since they have credit balances, we are going to debit those accounts. We will debit them into our income summary general account. Or I shouldn't say debit them into, we will credit our income summary general account for the total of those debits. Next, our second closing entry is closing income statement accounts that have debit balances. So here we see all of those that have debit balances. To close them, we need to credit those accounts. This is a long list of accounts. We credit all of those, and we're going to debit income summary for the total amount. Third closing entry is when we record net income or net loss, and then at the same time, it's going to close our income summary account. So here we're going to take our total of income statement credit accounts. We're going to subtract from it our total of income statement debit accounts, and that will give us either our net income or our net loss. In this case, we have a net income. So we are going to debit income summary to close income summary, and we're going to credit retained earnings. The way that I think of it is a net income, we are going to debit. A net loss, we are going to credit. So if we were to have a net loss here, we would be crediting income summary and we would be debiting retained earnings. Okay, and our last closing entry is to close our dividends account. So dividends has a debit balance, so we are going to credit dividends and we are going to debit retained earnings. And then we need to prepare a post-closing trial balance. A post-closing trial balance is a trial balance that is prepared after our closing entries. So once we've closed all of those temporary accounts, we are left with only our permanent accounts, and that is what will be listed on our post-closing trial balance. It is simply a list of all of our accounts and the balances in those accounts. Okay, here's our accounting cycle. We need to know our accounting cycle, and we've gone through this before in Accounting 1. The accounting cycle is the series of accounting activities included in recording financial information for a fiscal period. So this goes through a whole fiscal period. So step number 1, we're going to look at source documents and analyze those transactions. Step number 2, we're going to record those transactions into journals. Step number 3, we post those journal entries to ledgers. Step number 4, then, we prepare a schedule of accounts payable and a schedule of accounts receivable. Step number 5, we are going to prepare an unadjusted trial balance. Step number 6, we journalize those adjusting entries. Step number 7, we're going to post the adjusting entries. Step number 8, we prepare an adjusted trial balance. Step number 9, we're going to prepare our financial statements. So notice this is kind of small, but the financial statements, balance sheet, statement of stockholders' equity, income statement, statement of cash flows, and a departmental margin statement. Step number 10, we prepare closing entries. 11, we're going to post those closing entries. And then step number 12, we prepare a post-closing trial balance. Okay, that would be the end of the fiscal period. And then we start all over back at number 1, analyzing those source documents, or looking at source documents and analyzing those transactions. Great. Audit your understanding. Question number 1. What is the purpose of adjusting entries? We have to do adjusting entries to update our general ledger accounts at the end of the fiscal period. So the example that I like to use is for supplies. When we buy supplies, we keep on adding to our supplies accounts. So we might look at the end of the year, and in our supplies account in our general ledger, it shows that we have $500 worth of supplies. Well, even though we've bought supplies throughout the year and it's increased our supplies account, we use those supplies during the year. So we have to actually look at, yes, our general ledger says that we have $500 worth of supplies, but when we've used those supplies, how much do we have left? And we might realize we only have $100 worth of supplies left. So we need to make that adjustment into that general ledger account to show that we don't have $500, we have $100 worth of supplies. Number 2, what accounts are closed by each of the closing entries? So remember, we have 4 closing entries. Our first one is to close income statement accounts that have credit balances. Second, we close income statement accounts that have debit balances. Third, remember that one has 2 in 1. So we close our income summary account, and that also is recording our net income or net loss. And then the fourth one is closing our dividends account. Number 3, what is the purpose of a post-closing trial balance? It's to prove the equality of the debits and the credits in the general ledger after all closing entries have been posted. So remember, a post-closing trial balance lists our permanent accounts, so any account that has a balance, and here we're just making sure that our debits equal credits. And question number 4, what accounts are presented on a post-closing trial balance? I kind of just answered that. Those are going to be our permanent accounts. So we are going to see our assets, our liabilities, and our owner's equity accounts. Remember, that is our accounting equation here. That was the end of 4.4. You can now go on to the 4.4 work together.